Hi everyone, welcome to another of our virtual broadcasts for the ILS NYC 2021 event. Please visit our event website to see the details of our kind sponsors, without who we couldn't put on this kind of event, as well as to view all of the content from previous sessions, which will be archived there. So we're looking at the development of insurance-linked securities, always with one eye to the future. And this year we're focused on defining the next generation of this sector. And key within that will be actors such as the World Bank. And for this broadcast, I'm delighted to be joined by Michael Bennett, Head of Derivatives and Structured Finance at the World Bank Treasury. Hi, Michael. Thanks for joining me.
Hi, Steve. Pleasure to be here.
It was good to see you, even remotely, unfortunately not in person. But given the central role the World Bank has been playing in expanding the remit of catastrophe bonds, as well as other capital markets-backed risk transfer structures, I wanted to explore what the future may hold for this important area of ILS market activity. And so we're going to discuss what has worked well, what might change over time, and how the World Bank can help to stimulate a greater uptake of ILS and other forms of disaster risk and resilience financing tools. So perhaps for background, for our viewers who may not be so familiar, you could give us a little bit of information about what you do and how you cooperate with the ILS market and institutional investors.
Yeah, great. Well, I always like to start with the refresher that the World Bank is an international organization with 189 member governments. What we do in the ILS space is just a small subset of our overall engagement with these countries on disaster risk management. Most of that engagement would be what we would consider advisory work, helping countries assess and quantify their disaster risk. And where our team gets involved in the Treasury Department of the World Bank is really often the tail end of that engagement. And that's when a country's decided it wants to actually transfer some of its risk to the markets. And we do that in several different ways. Essentially, the transactions that we put on, or we are insuring our member government against a specific set of risks, and we're turning around and simultaneously placing that risk, reinsuring that risk in the market. And we can do that either through conventional reinsurance, or we can do that through the issuance of catastrophe bonds. To date, we've passed about $4.5 billion of risk to the markets, and roughly 65% of that has been through ILS.
So the catastrophe bond has obviously been a key tool, and I think the World Bank's been involved in some way in catastrophe bonds for close to 2 decades, is it now? Do you see that structure playing a key role going forwards in sovereign disaster risk financing, or could you see potentially other structures coming into play?
Well, absolutely. I mean, as I was saying, we do both reinsurance and ILS. We see ILS providing a lot of benefits to our member governments. One is clearly capacity. We found that the ILS market can take very large size deals, and being that our sponsors are governments, they have significant risks that they're looking to pass to the markets. So we've done deals as large as the Pacific Alliance deal, which was almost $1.4 billion entirely in the ILS market. So capacity has impressed us with the ILS market. We also, and our governments that we work with, very much appreciate the nature of ILS, that there's no counterparty credit risk. For a government looking to insure itself, the chance that a counterparty default could affect their insurance is significant. So the fact that ILS provides no counterparty credit risk is definitely a significant advantage. We found ILS generally provides longer maturities than in the reinsurance market, and that's also valuable to member governments because from a budgeting and approval point of view, getting annual approvals for a reinsurance program can be difficult. It means some governments, it means they're essentially spending all year reapproving for the next year. So the longer maturities we've gotten in the ILS market are something we really consider a benefit. And also, we like the price transparency we get from the book building process on a public ILS deal. Not that that's impossible in the reinsurance market to emulate that sort of price transparency, but The traditional book building, where we can see the prices offered from a wide range of different investors, creates a level of price transparency that's important to us. And again, when our sponsors, which are governments, are looking at the market, they're looking at using taxpayer dollars. So having that sort of price transparency is really important.
So you mentioned two things there. The tenure of the deals is valuable to your member countries, and then also the visibility of pricing. But what else do you think could perhaps be adapted with the catastrophe bond to make it even more useful to the World Bank's members?
Yeah, there are certain areas. If you look the other side of sort of what benefits do we get from the reinsurance market that we're not getting from the ILS market, and why would we sometimes prefer the reinsurance market? I mean, one aspect is the political nature of the deals we're doing. Is that often the member governments want to do gradual stepped payout functions so that it's not an all or nothing transaction. And in fact, a lot of governments want that first step in the payout function to be relatively low, a relatively high attachment probability, purely because of the political issues involved, that if you've told your population that you've insured them against earthquakes and an earthquake occurs, it's politically difficult to go back and say, well, it didn't quite trigger. So some member governments looking at this market really want the assurance that that even if it's a small payout, that an event that gets in the news will create some sort of payout. So that early triggers with a fairly high probability of attachment is something that traditionally we've been told the ILS market doesn't like. ILS investors don't like to lose very small amounts of money over time, whereas the reinsurance market can just price that risk and is more comfortable with that risk. But if we could get ILS investors more comfortable just simply pricing that into the transaction, the chance of a small payment, I think it could make the ILS market more attractive. Another issue along the same lines of something we found is available in reinsurance, but not ILS, is local currency denomination. ILS is really dollars and I suppose euros market. And sometimes we have member governments who would like to denominate their insurance in local currency. And that would be something that would be very interesting to see if we could do in the ILS market. Right now, if we have one of those inquiries, we automatically think that's a reinsurance type transaction, not an ILS transaction. And maybe one more I'd mention is reinstatement. One issue we have with ILS is, of course, if a trigger event occurs, often the government doesn't want to go uncovered for some period of time, which would be, if it's required to put a new cat bond in place, could probably be at least a matter of months. And reinstatement is something we can find in the more conventional reinsurance market, which if we could find a way, cost-effective way to build that into a cat bond structure, then that would be another way that ILS, I think, could really compete for some of these transactions that right now we would take to the reinsurance market.
Yeah, that's interesting. So it sounds like right at the lower end, and then also the more remote end, the reinstatement end, there could be structural changes that may make that more appealing, I guess, to some of the members who haven't embraced the cat bond market yet.
Yeah, I think so.
Do you feel on the risk side that you have demand from members to look beyond sort of pure property catastrophe, or beyond the peak perils that we normally see?
Definitely so. I mean, I'm always reluctant to talk about new perils because we've really only scratched the surface on the major perils of earthquake and wind with our members. Considering we have 189 member governments and so many of them are vulnerable to wind and earthquake events. So I don't want to leave anyone with the impression that we're now moving on to more esoteric perils or different perils, because we really, again, we've really only scratched the surface on what we can do, even in earthquake and wind. But definitely we do look at other types of risks. We get inquiries from member governments whether those other types of risks could be taken to the ILS market. We had a program looking at whether famine risk is something that we could be insurable. I mean, we had not necessarily got to the point of thinking ILS versus conventional reinsurance, but whether it was even an insurable risk. And we did some research in that area. Right now, we haven't decided to move forward with a transaction in famine, but that's definitely a risk that governments are interested in seeing whether it can be insured. Other humanitarian crises like large-scale refugee movements, conflicts, whether those could be insured is also something we've been asked to look at. And in those areas, it's important to remember that we do have 189 member governments. So that's includes the rich world governments, the wealthy governments. So we're not always looking just to insure a country against its own risk. In some cases, we're looking with wealthier governments to look at how they could insure their aid budgets. Because of course, a wealthy government that might be called in a refugee situation or a famine situation to provide aid could be looking at the ILS market as a potential source of essentially insuring that aid budget as well. And maybe one more risk, just to go from to the life side of the market that we look at is longevity. We have a lot of public pension plans in our member governments that are exposed to longevity risk. So that's another area that we're interested in exploring.
And that would be an interesting one potentially for the ILS market, as we have seen appetite for longevity before, and even structured in a cat bond format. I guess everything we've discussed so far has been around the cat bond, but do you see or do you explore use of other structures? I know in the past the World Bank has done sort of derivatives related transactions, but do you ever look at other ILS structures such as the sidecar or?
Well, definitely, I'd say we look at conventional reinsurance and ILS are the two sources of risk transfer. And on the conventional reinsurance side, we've done it in different ways. We've used catastrophe swaps. We've used actual reinsurance agreements. I would say the other place we're looking at ILS type structures would be in terms of embedding them into other financial instruments of the bank. So for instance, the classic instrument of the bank is a loan, a development or a project loan, and whether we could start embedding certain insurance clauses into those loans such that perhaps if an event occurs, there's a suspension of coupon payments for a period of time, or a reduction in the interest rate for a period of time, or an extension of the maturity of the loan. That kind of embedding ILS type clauses into another instrument. So it's not just a standalone transaction for the government, but it's a part of potentially a product they're more familiar with like a loan, is something we've been looking at.
That's interesting. I had a long conversation during another one of my interviews for this event where we discussed climate risk and the embedding of sort of trigger related insurance products within other types of capital market financing and how that could assist on helping people to transfer climate exposures. Is climate front of mind currently for your member countries?
It definitely is. I mean, front of mind right now is COVID. So, and that's actually had an impact on some of the countries looking at other risks, because COVID is such an overwhelming priority for basically every government in the world. But after COVID, certainly climate risk is a significant issue for all the governments we're working with. There's definitely a number of governments looking at climate-related perils and whether they can be brought to the ILS market. I mean, one we've done forever is wind, of course. Hurricane is a climate-related peril. But in addition, drought, flood are two perils we're talking to countries about all the time. One issue that I see, particularly with drought, and with the nature of our sponsors, which again are governments, is that any event like drought that takes place over a period of time creates a certain political risk. And we saw that with our pandemic transaction, that of course pandemic, like a drought, like a famine, evolves over time. And so there's always the opportunity when you create a trigger around an event that evolves over time for there to be criticism. And we saw that again in our pandemic transaction, that pandemic transaction triggered for coronavirus, for COVID-19, but critics were able to say, why didn't it trigger a month earlier? And so the similar thing could happen, I think, in a drought transaction. So I think we'd be particularly careful around any sort of drought transaction. And I'm sure we will be bringing them to market in the future, but I think we need to be particularly careful around the political risk there, because for our purposes, in terms of that sort of political risk, there's a certain elegance to an earthquake transaction or even a hurricane, which may take several days, but it's at least a very defined moment in time. Whereas drought, famine, pandemic, all these things which take time to develop have a political element, because of course it's likely, unless you're insuring extremely high probability, it's likely there will be news reports about a drought or a famine or a pandemic before the transactions themselves actually trigger.
Yeah, no, that's obviously a challenging thing to structure a trigger for as well. And in the case of the pandemic, it's obviously something that was completely unprecedented and nobody had seen before or experienced in recent history. So makes it especially difficult. When it comes to climate risk, one of the factors that people often raise is the fact that they can be very sort of long-term trend type risks. So people are wondering whether it would even pay enough for the capital markets as a peril in that case. Do you have a view on that? Do you think maybe the markets are deep enough that there is appetite for taking on those types of exposures?
You know, I think so. I mean, certainly the kinds of risks we bring to the market are almost always significant diversifiers. So we have found, I think, that the ILS market is very willing to work with us because the value of the diversifiers. And in the climate space, you know, we're unlikely to be bringing ultra long dated transactions to the market. I mean, the place where you'd see the really long dated transactions would be certainly in longevity risk. I think the market and our side, us and the member governments, could come to a pricing agreement on most of these transactions when you're talking about 2, 3, 4 year transactions.
Yeah, and I guess that's the efficiency of the capital markets as well, isn't it? That they can come to price agreement fairly easily with the help of structuring and modeling.
Yes.
So how else do you feel the ILS structure and ILS capacity could make itself useful in the World Bank's financing work?
Well, again, we always ask for flexibility, for open-mindedness whenever we talk to ILS investors, and for the most part, they're very willing to work with us. But it is these issues I mentioned before, like local currency, like reinstatement, which like the ability to bring high probability of first loss transactions to the market, where I think if the ILS market is flexible, we'll be able to bring more of the risks that we can originate to that market.
And when you talk about those high probability ones, do you think they would be bundled into the same transaction, or do you think maybe governments would need to be sponsoring multiple tiered transaction or tranched transactions to get the right investor appetite?
Yeah, it could be. And right now, of course, one way we can do that is we already have that ability, which is to place some of the risk in the reinsurance market and simultaneously place a different tier of risk in the ILS market. But that creates its own inefficiencies to have to and transaction costs to do a multi-tier transaction. So what I'd like to be able to see is what we can do with the one single reinsurance contract, which is just to start the first essentially payment trigger at a fairly high probability and just have that higher probability of a small loss priced into a transaction.
And I guess in a blue sky sort of vision of the future, how would you like to see sort of the World Bank's activities in this area? What do you think the World Bank will always be a major player in helping governments to finance their risks and perhaps also their resilience going forwards as well?
Well, I mean, it's certainly not our goal to dominate the sovereign side of the market. And we think we have a very good mousetrap in this area in terms of our cat bond program and even our reinsurance ability is a significant benefit we give to member governments. But certainly we would fully support governments going directly to the market. We'd love to see, as we've said, just more universal application of disaster risk hedging. If government, instead of going through us to the ILS market, could get a certain level of natural disaster risk protection from its own sovereign bond issuances, like we discussed before, if they could get that protection by embedding into sovereign bonds provisions that they get a interest holiday for a certain period of time if an event occurs, that would be a great solution also. And even if that put us partly out of business in terms of doing cat bonds, I think that could be a really a great solution. Now, how realistic that is, I don't know, because right now, of course, sovereign bond investors and ILS investors are different different characters, and the Venn diagram where they meet is probably very tiny. But solutions like that, where natural disaster protection is more thoroughly embedded into other financial products, I think would be a great thing to see in the future.
That might also be very interesting from an ESG perspective, because as governments begin to issue ESG or socially sort of more responsible bonds, if they embedded their natural disaster risk financing needs within those bonds as well, you'd potentially produce something that would be very compelling to the big ESG allocators. I know ESG is something that you've factored into the World Bank's issuances in terms of how proceeds are used and collateral. Perhaps you could just talk about that a little bit and whether you think that is something that's going to be a standard within future World Bank related issuances.
Yeah, absolutely. We think we're getting some traction now with that. I mean, nothing fundamentally has changed in the way we do cat bonds since we did the first off our program in 2014. We always use the proceeds of any cat bond issuance for the period we have those proceeds, before trigger or before maturity, to support our sustainable development lending activities. And so that's always been true, but in the last couple of issues, we've made a point to remind essentially investors about that. And the feedback we've gotten has been very positive, because I think more of the ILS funds and ILS investors are hearing from their end investors that they need to report on ESG, that they're interested in sustainable development. So we've gotten increasingly positive feedback from the market on that. I would say unique in the ILS market to us ESG element, that the proceeds are being used for a sustainable development cause.
Yeah, it's something that comes up repeatedly at the moment, as ESG is such a hot topic that proving where proceeds are being put to work and used is really critical for some allocators to understand. So I think there you've done a great service by bringing those structures to market. So Michael, thank you very much for your time today. I really appreciate it. It was a pleasure to talk with you.
Thank you, Steve. It's always a pleasure for me to have a reason to get out of my pajamas in the morning. So I appreciate this
I'm glad to
opportunity.
have given you that reason, and I hope next time we can do this in person. Thank you, Michael.
Me too. Thank you, Steve.